Come on guys, let's now solve question number 11 from our Jan 2025 RTP. This question is from the topic of Accounting Standard 16. Quite unique from the rest of the questions because they focus on the conceptual understanding of the student in this question. This unlike the rest of the questions in our study material issued by the institute, but definitely covered in the class when we did our conceptual revision. Have a look at the question. It says, how will interest be capitalized when qualifying assets are funded by borrowing in the nature of bonds that are issued at discount? So what you've done is you have built an asset or you have purchased an asset, and that asset is a qualifying asset, meaning it is taking substantial period of time for its setup. And that borrowing, what you did, no, you did it in the form of bond. So you issued some bonds and you collected money, basically something like debentures. Such debentures or bonds or securities, whatever you issued them at discount. You always need to remember the definition of the word borrowing cost. It includes FIDAE. Remember, F, finance charges; I, interest and commitment charges; D, discount. D, discount. So any discount on issue of securities for the purpose of borrowing money to buy or set up a qualifying asset is also in the nature of borrowing cost. Read the question further. They've told X Limited issued in year 1 a 3-year 10% interest is payable annually. 3-year bonds. Face value is rupees 1 lakh. It is issued at rupees 90,000. So when you issue face value of bonds which is 1 lakh at rupees only 90,000, you are collecting 90,000 rupees from them but giving away bonds of 1 lakh to them. On redemption, you have to pay them 1 lakh. That 10,000 what you need to pay extra, it is discount on issue, redemption at par, but the 10,000 is in the nature of interest. Why do you do that? Maybe because you don't want to offer interest at a rate higher than 10%, and the person who's giving you loan is expecting interest at a rate higher than 10%. So what do you do in that case? In that case, you offer that person, I can't give you interest more than 10%. But what I can do is, I will give you 1 lakh rupees worth of bonds for 90,000. So basically, you give me 90. On return, you will receive 90 plus 10, 1 lakh. So the 10,000 is actually compensation of interest. So the 10,000 should be treated as interest. And they are telling us very clearly here, qualifying asset is ready to be intended to be ready for the intended use after 2 years. So 3 years is the loan period. First year and second year portion should be capitalized. Third year portion should be charged to P&L. And compute the borrowing cost to be capitalized if company uses for amortization of discounting charges on straight line basis. So what they're trying to do is, whenever we have issued bonds of face value 1 lakh at a price of 90, there is 10,000 rupees discount that is to be amortized over the loan period equally, straight line. 10,000 over 3 years. How much is it for each year? 3,333. See, in year 1, year 2, year 3, you're going to amortize this 10,000, 3,333, 3,333, 3,334 for one of theirs. Let's keep it for last year. Are you getting it? Because first 2 years will charge to asset. Last year you charge to PL. So we'll keep that 2 years as 3,333, 3,333. Got that? And how much is the borrowing? Borrowing is 1 lakh. You pay interest on face value, not on the issue price. On 1 lakh, interest rate at 10% as mentioned in the question. 10,000 for year 1, 10,000 for year 2, 10,000 for year 3. Total borrowing cost for year 1 is 10,000 plus 3,333, 13,330. For year 2, 13,330. For year 4, year 3, asset is ready at the end of year 2. So you can capitalize only till the end of year 2. So first year's 13,333, second year's 13,333 will be capitalized. Year 3's 13,334 will be transferred to PL. So basically total amount to be capitalized will be 26,666 and amount to be transferred to P&L is 13,334. And if you remember, we've discussed this accounting standard 16. Borrowing cost includes finance cost, interest and commitment charges. Commitment charges is prepayment charges. On that also they can put one question. And we had discussed this example. If in case you issue any bonds or debentures at discount, that should be still treated as borrowing cost. So this is the question on discounting amount. And any amortization or ancillary costs, actually it's not amortization, it is ancillary costs. any costs incurred for taking the loan, processing fee and all of that, that should also be treated as borrowing cost. And exchange difference to the extent marked as borrowing cost as per AS 11. Read with that. We've done some questions on that as well. And this is how it is. And answer is 26,666 rupees is to be added to the cost of the asset.